करना हाँ उसको ऑन करो. Hello friends, welcome to our session on Accounting Standard 28. AS 28 deals with impairment of asset. We have covered some important question in the previous lecture. If you have not yet seen, revise the previous lecture where you will see very important questions covered from study material, from exam, from RTP and other sources. What is impairment? Impairment means decline in the value of asset. Impairment of an asset takes place when recoverable amount is less than the carrying amount. Carrying amount means book value, that is cost minus accumulated depreciation minus accumulated impairment loss. Recoverable amount is higher of the two. Value in use, net selling price. Value in use is the present value of future cash flow generated from the use of the asset and the present value of the scrap value. Whereas the net selling price is selling price minus cost of disposal. Cost of disposal will include items like dismantling cost, brokerage, commission, etc. When you find that there are indications of impairment, you should sit down and compute the recoverable amount, and if recoverable amount is lower, then provide the impairment loss. The indications can come from external sources or the indication can come from internal sources. What about the accounting treatment of impairment loss? There are two types of asset: non-revalued asset, revalued asset. In case of non-revalued asset, the impairment loss will be fully charged to P&L account. Provision for impairment loss will be shown as a deduction from asset in the balance sheet. In case of revalued asset, impairment loss will be first charged to revaluation reserve and then it will be charged to profit and loss account. And then we have taken certain questions on that. We have taken questions where we have learned to compute value in use, net selling price, recoverable amount, impairment loss, presentation in the balance sheet, presentation in the profit and loss account, calculation of revised depreciation. The depreciation charge after impairment loss will also reduce because carrying amount of the asset will also reduce. Is it right? So these are our this was we have covered till the previous lecture. In case if you want to enjoy this lecture, subscribe to our YouTube channel AS Foundation, like the video, share your comment. If you have a doubt, you can mail us on asfoundation1@gmail.com or you can call us on 9766921860. Our lectures are also available on website vinod.in. Lectures are covered in detail the way it is appearing on your YouTube channel. We have covered many examples on every accounting standard and your regular topics also. The idea is that the student should read comprehensively. In professional exam, if you want to score very good marks, you must cover a large variety of question. You must practice a lot. If you practice a lot, if you cover a large variety of problems before going to the exam, you will have confidence and you will be able to write very good answer in the exam. So are you seriously interested in getting the good rank? Are you seriously interested in passing in the first attempt, getting good marks, making your parents proud? This is the place. So go to website vinod.in and you can purchase the entire advanced accounting lecture at a very affordable and reasonable price for you. You can also purchase financial management lecture. You can also purchase the books on financial management and advanced accounting, very comprehensive material. You can also purchase financial management summary chart also, so that you can revise at one place. So today we are going to take question number 15. Please come to question number 15. All of you please Come to question number 1515. Write down important. First of all, mark it important. This question was asked in exam, May 15 exam for 5 marks. Do not ignore this question. Must do. This question will come under the category of must do. Okay. SMC Limited is having a plant, an asset whose cost on 1/10/2012, underline the date, 1/10/12 is 38,000 lakhs, and the plant was having a useful life till 31st March 2020. Till 31st March 2020. So what is the total useful life? Yes, please count and give me the answer. From 1/10/12 to 31st March 2020, what will be the useful life? What will be the useful life? Useful life will be, this is half year and then 7 more years. So 7.5 years. Useful life will be 7.5 years. Correct? Is it right? Useful life 7.5 years. Please comment yes or no. The estimated residual value is 900 lakhs. The selling price on 31st March 15. So this is the date. There is an indication of impairment. From 1st October 12 to 31st March 15, 2.5 years are over. 2.5 years are over. The selling price is 20,000 lakh and the cost of disposal expected is 100 lakh. So net selling price will be 19,900. 20,000 minus 100, 19,900. Now they are saying the expected cash flow from the plant, expected cash flow from the plant are as under. So these are the next 5-year cash flow given to you. Then when they are saying expected cash flow from the plant, this 4500 includes residual value. Includes residual value. If they use the term expected cash flow from use of plant, then it does not include residual value. So wording of the question is important. Expected cash flow from the use of plant does not include residual value. Expected cash flow from the plant includes residual value. So do not add 900 again. Do not add 900 again. Okay, in the last year, because the wordings are expected cash flow from the plant. Okay, now they have given you discounting factor. Use the same discounting factor if you want, or you can calculate your own factor. The company provides depreciation on straight line basis. Very easy. You are required to determine on 31st March 2015 value in use. Compute the present value. Impairment loss if any. So we'll have to find out the carrying amount, compare with recoverable amount, then we'll decide to provide impairment loss, and the revised carrying amount for financial year ending 31st March 2015. What will be the revised carrying amount on 31st March 15? What we should do in such problem? First we'll find out value in use. Write down please. Step number 1, calculation of value in use. Value in use, first year 4,100 cash flow and the discounting rate is 10%. So take on your calculator 4100 divide by 1.10 equal to 3727.27 equal to memory plus Second year is 5900. Type 5900. Type 5900 divided by 1.10, 2 times equal to 4876.03 memory plus. Third year 6000 divided by 1.10, 3 times equal to 4507 memory plus. Fourth year 7800 divided by 1.10, 4 times equal to, you get 5327.50 memory plus. Fifth year 4500 divide by 1.10, 5 times equal to, so you will get 2794.50 memory plus memory recall. Use memory plus function properly, you will get the answer. So the answer is 21228.50. 21228.50. This is your value in use. This is your value in use. Now some student can ask a query. So please write down here. Read note below. Right here, read note below. The note will be the salvage value is included in the cash flow of the fifth year. Some of you have a query why we have not taken 900. Please read this note, and then to make your life easy for future period, I have written a note. If cash flow from the use of the asset is given, then add scrap value. If cash flow from the asset is given, then do not add scrap value. So that is the answer of your query, why we have not taken scrap value here. Okay, so this is my value in use. Next task, write down. Next task, please write down. Step 2, write down in your notebook, write down net selling price. Net selling price, write down please. Net selling price is selling price minus cost of disposal. Selling price is 20,000 minus cost of disposal is 100. So 19,900. Then step 3, write down recoverable amount. Under that write down higher of the two. Higher of the two. Under that write A. Value in use 21228.50. Net selling price 19,900. Therefore recoverable amount is 2122.8.50. Recoverable amount is 2122.8.50, being the higher of the two. And then step number 4, write down carrying amount on 31st March 2015. Carrying amount on 31st March 2015. The cost of the asset is 38,000 lakh. Estimated residual value is 900. Estimated residual value is 900. Divide by 7.5 years annual depreciation and multiplied by 2.5 years. 2.5 years are over. On 31st March 2015, 2.5 years are over out of 7.5 year. Therefore, the carrying amount will be 38,000 minus 900 divided by 7.5 equal to 4946.66. That is annual depreciation into 2.5 completed year. That is your depreciation, total depreciation. This is your total depreciation. So 2.5 years are over. So you should make it 5. Wait, 2.5 years are over. So what I am getting is depreciation. So instead of carrying amount, write down accumulated depreciation. On 31st March 2015, this will come to 1, 2, 3, 6, 7. Accumulated depreciation 1, 2, 3, 6, 7. Step 5, write down carrying amount. Carrying amount will be cost minus accumulated depreciation. Cost minus accumulated depreciation. 38,000 is the original cost. 12,367 is the accumulated depreciation. So your carrying amount today is 25633. 25633. Approximately 25633 is the carrying amount. Then you write down step number 6. Impairment loss. Impairment loss will be carrying amount minus recoverable amount. Carrying amount 25633. Recoverable amount is 2122.8.50. So the answer is 25633 minus 21228.5. So that impairment loss comes to 4405.50. And the last step 7, write down revised carrying amount. Revised carrying amount will be 25633 minus impairment loss 4404.50. So that comes to 21228.50. 21228.50. 21228.50. So this is the answer of this question. Very important question. Please note it down carefully. Please note it down carefully. Very important question. Can't miss. Right? So now we'll go to next question number 16. Question number 16 is very, very important. Please mark it here. Very to the power 2. Important. This question is in your study material. This question was asked in November 11 exam for 4 marks. RTP May 16, November 15 exam for 5 marks. Okay. Let us solve question number 16. First we'll read the problem. The answer is already printed in the book. So I am going to explain. You will concentrate on understanding part. You will concentrate on understanding part because the answer is printed in the book. G Limited acquired a machine on 1st April 2005 for rupees 7 crore. That has an estimated useful life of 7 years. 7 crore is the cost. Life is 7 years. The machine is depreciated on straight line basis. Does not have residual value. So your annual depreciation will be 7 crore divided by 7 years is 1 crore. And it was purchased on 1st April 2005. On 1st April 2009, the carrying value of the machine was reassessed at rupees 5.10 crore and the surplus arising out of revaluation is credited to revaluation reserve. First we'll compute carrying amount on 1419. 149. Carrying amount on 149. Asset was purchased on 1st April 2005. asset was purchased on 1st April 2005. Today is 1st April 2009, 4 years are over. So out of 7 crore, depreciation of 1 crore into 4 years, 4 crore depreciation has been provided. Therefore, carrying amount of this asset on 1st April 2009, carrying amount of the asset on 1st April 2009 will be 3 crore. Do you agree? But what they have done, they have computed the revaluation amount. The revalued amount is 5.10 crore. The revalued amount is 5.10 crore. The revalued amount is 5.10 crore. Book value is 3 crore. Revalued amount is 5.10 crore. So what is your revaluation reserve to be created? What is the revaluation reserve to be created? You are going to appreciate the value of the asset from 3 crore to 5.10 crore. You will create a revaluation reserve of 2.10 crore. After creating revaluation reserve, the revised carrying amount will be 5.10 crore. After revaluation upward, it will be 5.10 crore. Now they are saying for the year ended 31st March 11, condition indicating an impairment of the machine existed and the amount recoverable ascertained was only 79 lakh. 2 more years are over. 2 more years are over. So we are going to first provide depreciation. Depreciation for 2 years. 5.10 out of 7 years, 4 years were over. So only 3 years are remaining. 5.10 divided by 3 multiplied by 2. So this is the total depreciation provided in the last 2 years. So my carrying amount on 31st March 11 should be 1.70 crore. Carrying amount is 1.70 crore and recoverable amount is given in the problem 79 lakh, 0.79 crore. Therefore, there is an impairment loss. 1.70 minus 0.79, 1.70 carrying amount minus 0.79 recoverable amount. So you have an impairment loss of 0.91 crore. You have an impairment loss of 0.91 crore. Up to this we have understood. Any doubt? 0.91 crore. So we have completed the discussion up to this paragraph. Now you are required to calculate the loss on impairment, that is 0.91 crore of the machine, and how this loss will be treated in the books of G Limited. Now we have to decide how much loss will be adjusted against revaluation reserve and how much loss will be adjusted against P&L account. For that we have to see how much is the balance in revaluation reserve. So what was the revaluation reserve created? 2.10. So next working will be balance in revaluation reserve account. Balance in revaluation reserve account. This they will not teach you in the normal material, but you have to know, if you are following a policy of revaluation, excess depreciation can be reduced from revaluation reserve, and that is what they have done. G Limited had followed the policy of writing down the revaluation surplus by the increased charge to depreciation resulting from revaluation. So what they are doing, understand, as per the company policy, if because of revaluation the company has to provide more depreciation, that additional depreciation will be transferred from revaluation reserve to general reserve. AS 10 allows you to do that. If you read AS 10, company can follow two policy. One, do not disturb the revaluation reserve, And second policy could be excess depreciation provided can be transferred from revaluation reserve to general reserve, and that is what this company has done. It has transferred the increased charge of depreciation from revaluation surplus to general reserve. So the student will now tell me how much is the amount that they are charging every year, transferring every year from revaluation surplus to general reserve. Earlier depreciation was 1 crore. Now depreciation is 1.7 crore. So 2.10 was my balance in the beginning, and the extra depreciation 1.70 crore now after revaluation minus 1 crore earlier, 1 crore depreciation provided earlier. So that excess depreciation they are debiting revaluation reserve, crediting general reserve. Over a period of 2 years, the total revaluation surplus reduced is 0.70 into 2. 0.70 into 2, so 2.10 minus 1.40. Now the balance in revaluation reserve is only 0.70. Now the balance in revaluation reserve is only 0.70. Excess depreciation 70,000 per year or 70 lakh per year into 2, 1.4 crore is debited to revaluation reserve, credited to general reserve. And what is my impairment loss? 0.90. Therefore, impairment loss to be adjusted against revaluation reserve, impairment loss adjusted against revaluation reserve will be only 0.70, because the balance is only 0.70. And the last line, therefore revaluation reserve adjusted against P&L account will be total 0.91 minus 0.70 is 0.21 crores. 0.21 crores. So that was a very good question. I will explain the answer again. First, compute carrying amount on the date of revaluation. So that is 3 crore. Revalued amount is 5.10 crore. Create revaluation reserve 2.10 crore. After that, your carrying amount will become 5.10 minus depreciation for 2 years, 2009-10, 2010-11. Depreciation will be on revised amount. Remaining life is 3 years. So 5.10 divided by 3 means every year 1.70 into 2, 3.40. Now on the date you have to provide for impairment. The carrying amount is 1.70. Revalued amount 0.79 is given. Therefore impairment loss is 0.91. Question is, how will you adjust? For that we need to check the balance in revaluation reserve, which is coming to 0.70. So out of total impairment loss of 0.91, 0.70 adjust against revaluation reserve and 0.21 adjust against profit and loss account. Is it right? Is it right? Say yes or no. So if you want the hard copy of these notes, this chapter, you can write your name and email address, phone number in the Google link which is in the description box, and our office staff will provide you the PDF notes of this chapter. These are high quality notes. Everything is covered. You will not find similar notes in any other material. You will not find so many questions in any other book. Trust me. So therefore immediately you can first subscribe to the channel, fill the Google sheet and get the notes and prepare from that. Even the answers are printed for this chapter, so you can revise easily. So this is the answer of this question. You can check the answer. I have already explained. Each and every line was explained to you. Okay. So that completes my question number 16. Now next issue is cash generating unit. The standard says first you will compute impairment loss for single asset. But to compute the impairment loss for single asset, I require carrying amount which is available from books of account. I require net selling price which can also be found out usually easily except in some cases, and I need value in use, that is the present value of cash flow generated from the use of the asset. If you look around you, suppose you go to a factory, in that factory there are hundreds of machines, equipment, computers, furniture. Individual asset may not generate independent cash flow. They generate cash flow by working together as a unit. Therefore, the standard says if you cannot compute the recoverable amount of CGU, then you will go to, if you cannot compute the recoverable amount of single asset, then you go to cash generating unit. Cash generating unit. Cash generating unit. In short, I will call it CGU. You will go to cash generating unit which includes this asset and which generates independent cash flow. So cash generating unit is a group of asset. Let's say this classroom together is a cash generating unit. It has benches, projector, computer, laptop, AC, and so many other equipments are installed in the classroom. They together generate cash flow as a unit. So if I think that this projector is impaired, but projector does not generate independent cash flow, I will test the whole CGU for impairment. I will test the whole CGU for impairment. Example of CGU. For example, you go to a hotel. In that hotel you will find you have restaurant, rooms, conference halls, health club, other facilities. So if you see, there are different activities happening. You have restaurant, rooms, conference hall, health club, etc. Are these generating cash flow independently? Are they generating cash flow independently? The answer is no. So if I have to apply the impairment testing, I will have to apply the impairment testing for the entire hotel. So hotel is the cash generating unit because rooms do not generate independent cash flow. They depend on other activities also. Customer who comes to the hotel to attend conference hall can enter into restaurant and can enjoy the services of restaurant. So restaurant depends on conference hall, or rooms depend on conference hall. So they are all generating cash flow together. They are not generating independent cash flow. If I have to apply this standard, I will have to apply for the entire hotel and not the individual facilities. So the whole hotel will be tested for impairment. One more example we'll take. Suppose you go to a multiplex, megaplex, where you will find you have lot of sports activities, bowling alley, theater, wow, hotel, shopping mall, all under one roof. Okay, whether these will be treated as CGU or the whole multiplex will be CGU. So one has to check whether these activities they generate independent cash flow. If the answer is no, they are not capable of generating revenue independently. They depend on the other. If I have to apply impairment testing, I will have to apply to the entire multiplex. The whole multiplex will become a CGU and it will be tested for impairment. Question number 17. A mining entity owns a private railway to support its mining activity. So this is the mine and there is a railway, private railway, to carry whatever minerals, ores from one place to another within the mine. The private railway could be sold only for scrap value. Private railway does not generate independent cash flow. Okay, the whole mine together generate independent cash flow. And it is written in the problem also, it does not generate cash inflow which are largely independent of the cash inflow from other assets of the mine. So you can't compute value in use of this private railway. So what will be the basis for computing impairment loss? Private railway or the entire mine? Whether you will compute recoverable amount of private railway or the entire mine? The answer is it will be entire mine, because private railway does not generate independent cash flow. I have written the answer for you. Concentrate on this. It is not possible to estimate the recoverable amount of the private railway because its value in use cannot be determined. The private railway does not generate independent cash flow. The only cash flow it can generate, which we can identify, is the scrap value, but we are not able to compute its value in use, and it is not meant to be scrapped right now. It is in the use of the business. Therefore, if I have indication of impairment, I will test the entire mine for impairment. I will compute the recoverable amount of the entire mine. Is it right? Next question, number 18. A bus company provides service under contract with a municipality that requires minimum service on each of the separate routes. Important question. You will get the contract only if you provide services on all the 7 routes. Asset devoted to each route and cash flow from each route can be identified separately. You can find out which are the assets for each route, how much cash flow each route generate. Calculation of cash flow can be done separately for each route. One of the routes operates at a significant loss. Out of 7 routes, one route is operating at a loss. It is an indication of impairment. Should the company determine the recoverable amount for individual asset or for the cash generating unit? So multiple choice question can be asked. Option A, we should compute recoverable amount for single route which is operating at a loss, or we should compute the recoverable amount for all 7 routes. Option A, should we compute recoverable amount for single route which is operating in a loss, or should we compute the recoverable amount for all the 7 units put together? What is your view? Answer please. The answer would be all the 7 routes. The answer would be all the 7 routes, because you cannot close down one single route. Either you operate all 7 routes or you can't operate any route. Okay, therefore, even though we can compute their cash flows separately, but they do not generate cash flows independent of the other routes. You are not allowed to close down one route, and hence all 7 units put together will be treated as CGU, and all 7 units put together will be tested for impairment. So this means the whole group of 7 routes put together is CGU. Okay. cash generating unit for each unit is the bus company as a whole. Write down one homework. Question number 19, write down as homework. Question number 19, write down as homework. Now we'll come to next discussion, identification of cash generating unit to which an asset belongs. If there is any indication of impairment of an asset, then recoverable amount for that asset should be estimated. First rule, try to find out recoverable amount of cash generating unit. Find out the recoverable amount for cash generating unit. Can you do it? If the answer is yes, then do it. But if it is not possible, then you go to that CGU to which this asset belongs and whose recoverable amount can be computed. I will give the example of this classroom. In this classroom you have so many assets, benches, projector, computer, camera, and suppose there is an indication that projector is impaired. So I will try to find out the recoverable amount of the projector, but I cannot compute because projector does not generate independent cash flow. So this whole classroom, which includes this projector, and assuming that this classroom generates independent cash flow, we are going to test that classroom for impairment. First, always, if possible, apply this standard to individual asset. If not possible, then apply this standard to the group of asset which include the asset and which generates independent cash flow. If suppose the classroom also does not generate independent cash flow, then I will go to the enterprise and we'll see whether the whole enterprise generates independent cash flow or not. So finally you will reach a level which generates independent cash flow and you will apply the impairment testing for that level. Okay. So when will you go to CGU level? When will you go to CGU level? If the estimation of recoverable amount of individual asset is not possible. Estimation of recoverable amount is not possible for an individual asset if the asset value in use cannot be estimated to be close to its net selling price. Look at the example of private railway today we have discussed. Private railway has got one scrap value today, but it is not equal to its value in use. Value in use of private railway is not equal to its scrap value. Okay, therefore I cannot compute recoverable amount of the private railway. And second, it does not generate cash inflow which are largely independent of other assets or group of assets. So the summary of this discussion is, if cash flow cannot be generated by the asset independently, then we will apply impairment testing to the cash generating unit to which the asset belongs and compute the recoverable amount of CGU. If recoverable amount of CGU is lower than the carrying amount of CGU, the CGU is impaired. Okay. Now how to identify the ability to generate independent cash flow? There is some guideline given in your book. Next point, no need to write, written, it is written in the book. If an active market exists for the output produced by an asset or a group of asset, this asset or group of assets should be identified a cash generating unit even if some or all of the output is used independently. If there is a CGU, check if output can be sold in the market, if the output can be sold in the market. If the answer is yes, it will be a cash generating unit, even though sometime some of the output may be used internally. Some of the output may be used internally. So company may have one milk department, one sweets department. Milk is capable of being sold in the market independently, but milk may also be supplied to the sweets department. Still, milk can be treated as a cash generating unit. Milk department can be treated as a cash generating unit. So how do you estimate the cash flow of this milk department, which is transferring some of the output to this other department also? So the standard says management best estimate of the future market price is used to value output. So milk department will value or calculate cash flow based on the market value of that output, even though some of the output is used internally. So suppose they produce 1000 liters, 200 liters are consumed internally. So they are going to value this 200 liter also at the market price for the purpose of computing cash flow of the transferor and transferee. For milk producing department, it will be treated as inflow. For the sweet department, which is buying from the milk department, it will be treated as an outflow. Next point is CGU should be used consistently unless a change is justified. That means this is one CGU, this is another CGU, this is another CGU. So we have to use the CGU every year consistently. But sometimes there can be transfer of asset from one CGU to another. Machine 1 of CGU, let us call it CGU A, may have been transferred to CGU B. Then what we'll do, while calculating the carrying amount of CGU A, I will remove this machine and I will add it in the other CGU, only if it is justified. Otherwise CGU will be determined consistently. That line was not important. The important line is the next one. Recoverable amount of CGU. Recoverable amount of CGU is higher of the two, net selling price and value in use. So just like we compute the recoverable amount of single asset, we will compute the recoverable amount of CGU. But a CGU can contain many assets. A CGU may contain many assets. So how do I compute the carrying amount of the CGU? A CGU may contain many assets. This classroom has many assets. So in order to compute the carrying amount of CGU, it will include carrying amount of those assets which are directly attributable. This bench, fan, AC, computer, projector, camera and board, these are directly attributable or which can be allocated on a reasonable and consistent basis and which generates future cash flow considered in calculating value in use of the cash generating unit. Whatever assets you have considered in calculation of value in use, whatever asset you have considered that this asset generates value in use, consider those assets in the carrying amount. So if I have considered benches, if I have considered projector in the classroom, if I have considered computer in the classroom, if I have considered camera in the classroom, etc., I should consider the same asset in the carrying amount of CGU. There is a matching. So that there is a matching, same item should be considered here also, same item should be considered also, and same item should be considered here also. Okay. It does not include the carrying amount of any recognized liability. So CGU will not include carrying amount of any recognized liability. So that is about CGU. Now let us solve one question from study material. Write down important. All of you please mark it important. Okay, so I'll just read the question. Good Drugs and Pharmaceutical Limited acquired a sachet filling machine on 1st April 2001 for rupees 60 lakh. Cost is 60 lakh. Machine is expected to have a productive life of 6 years. Life is 6 years. And at the end of this year, financial year 1-2, carrying amount is 41 lakh. So there is a machine which is sachet filling machine whose carrying amount is 41 lakh. A short circuit occurred in this year, but luckily the machine did not get badly damaged and it is still in the working order. At the close of the financial year, the machine is expected to fetch 36 lakh if sold in the market. Net selling price is 36 lakh. Carrying amount is 41 lakh. But I need one more number. I need value in use also. However, the smallest group of asset comprising of this machine is capable of generating cash inflow of rupees 50 crore per annum and has a carrying amount of 3.60 crore. The machine itself does not generate cash flow. So I can't compute value in use. I have to go to smallest group of asset. I have to go to CGU. What is the carrying amount of CGU? Carrying amount of CGU is 3.46 crore. And what is the recoverable amount? 54 crore per annum. My God. So therefore, or even if I take 5.40 crore, maybe it is a typing mistake, 5.40 crore, there is no impairment. And what is the net selling price of this CGU? Net selling price is 4.44 crore. So I will just write it nicely for you. CGU carrying amount 3.46 crore. Recoverable amount higher of net selling price 4.44, value in use 5.40. Therefore, recoverable amount 5.40. Recoverable amount is more than CA. No impairment. CGU is not impaired. CGU is not impaired. I hope it is clear. CGU is not impaired. If the CGU is not impaired, the asset of the CGUs are also not impaired. If the entire CGU is not impaired, if the classroom is not impaired, this camera is also not impaired. Even if there is indication of impairment, but because it is a part of the classroom and the classroom is not impaired, the corresponding camera is also not impaired. But then, because there was an indication of impairment, you may find out whether its scrap value which you have considered earlier should be revised, whether the useful life which you considered earlier should be revised. So if there are indication of impairment of an asset, you may have to revise its scrap value or useful life, even though you don't need to provide the impairment loss because it's a part of the CGU and the CGU is not impaired. That will be the answer of this question. Okay. So please read the answer on your own. I have given the answer in the notes. You can find the answer in the study material also. If CGU is not impaired, the asset is also not impaired. However, one may think about revising the scrap value or the useful life of the asset for which you have got the indication of impairment. Now next is goodwill. So the question is, when is goodwill recorded in the book? All of you know goodwill is recorded in the book. Anybody who would like to reply, goodwill is recorded in the books when a business is acquired. Goodwill is recorded in the books when business is acquired. All of you know that. Goodwill is equal to purchase consideration. Good students will note down. Other student will think that this is some kind of meditation center and you will meditate. Purchase consideration minus net asset acquired. That is how goodwill is created in the book. Okay. If there is self-generated goodwill, it doesn't appear in the book. So no question of impairment of goodwill. Our topic is how to provide for impairment of goodwill. So first, goodwill should appear in the books. Goodwill will appear in the book if you have acquired a business and your purchase consideration paid is more than the net asset acquired. Okay. So now I am going to give you a brief note on how to do the impairment of goodwill. You can note down if you want. Goodwill impairment. Goodwill impairment. First is, if goodwill can be reasonably and consistently allocated to CGU. Can goodwill be allocated to CGUs? Can the goodwill be allocated to CGUs? So if you have acquired a business, you may have acquired 3-4 CGUs. Check whether goodwill can be allocated to the CGUs. If yes, apply bottom-up test. Apply bottom-up test by allocating goodwill to CGUs. By allocating goodwill to CGUs. And the second possibility is, if goodwill cannot be reasonably and consistently allocated to CGU, then first apply bottom-up test. First apply bottom-up test without allocating goodwill. That means without allocating goodwill, test the CGU for impairment without allocating goodwill. And second, then apply top-down test. Then apply top-down test by allocating goodwill to larger CGU. By allocating goodwill to larger CGU. So first you apply bottom up test if goodwill can be allocated reasonably and consistently. Okay. So suppose X Limited acquired A Limited and it acquired 3 cash generating unit from A Limited and it paid for goodwill. It paid for goodwill, and suppose goodwill can be allocated to them in some reasonable way, allocate the goodwill, then apply impairment testing. But if goodwill cannot be allocated to them, then all 3 units together will be called larger CGU. So all 3 units will become one now, and goodwill will be allocated to all the 3 together, right? So that is about goodwill impairment. Now one more note write down. I will give you one more note. If there is impairment, please note down this much also. If there is impairment, impairment loss will be first allocated to goodwill. And then balance impairment loss, will be allocated to CGU. If there is impairment, when you are testing goodwill for impairment, then impairment loss is first allocated to goodwill and balance is allocated to CGU. Okay. Why we will allocate impairment loss to goodwill first? That is not written in the book. They have only written the process. The answer is goodwill represents excess earning capacity. So if there is impairment, then the excess earning capacity is lost. Hence goodwill is impaired first. Is it right? So I have written all this in your book. Now we'll take a question number 21. With the help of this question number 21, 22, 23, because I need numbers, with the help of these numbers, I will be able to explain how to compute impairment loss for goodwill and how to allocate it. So I am taking actual question, I am calculating actual question. Okay, I am calculating using actual question to explain it to you. XYZ Limited has a cash generating unit plant A as on 1st April 2001, having a carrying amount of 1000 crore. Then the plant was acquired under a business combination and a goodwill of 200 crore was allocated to it. So here goodwill is allocable to plant A. Plant A has a useful life of 10 years with no residual value. . it is depreciated on straight line basis. On 31st March 2002, plant A recoverable amount is 600 crore. Calculate the impairment loss on plant A and also prescribe the allocation. Very important question for goodwill. Now first I will explain. We have acquired plant and goodwill. First understand, then we will see the answer also. What was the cost of plant? 1000. Amount paid for goodwill 200. So total consideration paid was 1200. 1000 for plant, 200 for goodwill and 1200 total. Now this purchase was made on 1st April 2001 and we are testing for impairment on 31st March 2002. So less depreciation. Plant has a life of 10 years. Residual value 0. So 1000 divided by 10. Plant 100. Goodwill nothing is given. 100. So carrying amount is 900, 200 and 1100. Carrying amount is 900, 200 and 1100. Now what is the recoverable amount? 600. Recoverable amount is 600. So student will pay attention. 1100 is my total carrying amount after allocation of goodwill. Recoverable amount is 600. So impairment loss will be 500. Impairment loss is 500. Out of 500, we are going to allocate towards goodwill 200 first. We are going to allocate towards goodwill because goodwill represent excess capacity. If there is an impairment, you have lost that excess capacity, and we are going to allocate towards CGU, that is plant, 300. This way impairment loss will be reduced. So what you will do in the exam, first you will find out carrying amount of the plant and goodwill on the date you are testing for impairment, which is 1100. Then compare with the recoverable amount, which is 600. Calculate the impairment loss, which is 500. First allocate to goodwill, that is 200, because first goodwill will be fully written off, and then 300 will be allocated to plant. 300 will be allocated to plant. So impairment loss will be allocated like this. First to goodwill 200, then to asset 300, total impairment 500. Last point, what will be the carrying amount after providing impairment loss? Goodwill is 200 minus 200, 0. Plant will be 900 minus 300. 900 minus 300. So plant 600, total 600. Is it right? So journal entry would be like this. Impairment loss account debit. Please write down in the notebook. Question number 21. Impairment loss account debit 500. To goodwill 200. Goodwill will be directly written off. Goodwill will be directly written off. So credit goodwill. Goodwill written off. And to provision for impairment loss. This will go to reduction from asset in the balance sheet. Goodwill will be reduced. Provision for impairment loss reduced from plant. And the second entry, plant P&L account debit 500. Please note it down. To impairment loss 500. Impairment loss will be transferred to P&L account. So with the help of journal entry, you will understand again that impairment loss will be first used to write off goodwill and then to the assets of the CGU, and impairment loss will be transferred to profit and loss account. Is this right? Is this right? So today we'll stop here. We'll continue tomorrow. Thank you very much. So please note down, those who are watching on the YouTube, that you will require notes for all the accounting standard. You just have to pay for the books to our office. The amount of effort that we have put in teaching you is nothing compared to, or is so much as compared to your the price you will pay for the accounting standard book. So if you really want to enjoy the benefit of accounting standard book, you need to have the entire book in front of you. In spite of that, I would request you at least subscribe to the YouTube channel and send it to all your friends. Okay, write comment also, whatever comment you want to write. We are trying our best to help you out. Now how do you take it? It is up to you. If you need any other help, please call our office at 9766921860. Thank you very much.